and based on that we are just going to understand some more concepts, and whatever the concepts and whatever the numericals we are discussing in this series of the sessions, that all will be very important from the exam point of view, because that all will be based on the previous year questions. Okay, so now let's start the session. So our sale is also live. That means you can avail 77% discount on all the JAB and CAP product like mock test, ebooks while purchasing the paid batches. You can avail the 77% discount for applying code Y422. With applying the code Y422, you can avail a 77% discount on all the products. So first question is giving the bank account passbook of ABC firm has been showing balance of 50,200 rupees. Okay, so like I always explain this, whenever you just see that is a passbook of any firm or say cash book of any firm is given, and you have to just asking for the passbook of the firm or say cash book of the firm. So you just understand this question is from the bank reconciliation statement chapter. So in the exam, you will find 4 to 5 questions based on this chapter. Okay. So whatever I am just explaining here, you have to just do the question in the same way. So if the bank account passbook of the firm is given, so what the way I just explained you always have to write if the passbook of the firm is given. So opposite of that, you always write here cash book. Okay. Because this we have to determine if the passbook of the firm has been given, if the passbook balance of any firm or say any individual is given, that means we have to just evaluate or say we have to just determine the value of the cash book of the firm or say cash book of the individual. Fine. So if the passbook of the firm is given, so that means we have to ask for the cash book balance. So just write here cash book, and the second step you have to write by this way, like cash book and passbook. So first step is, if suppose that here it is given that the the cash book the cash book of ABC firm has been showing balance of 50,200 rupees. Suppose that here it is written instead of the passbook balance, if it is written here the cash book of ABC firm, so we write here passbook. Okay, but here passbook is given, so that's why we are just write here that is a cash book. After that, just circle this and just circle this for just understanding easily. So you have to just circle this and circle this. Fine. The next step is, now the bank account passbook of the firm has been showing balance of 50,200 rupees. So just write here that is 50,200 rupees. Okay. Suppose that if it is given like this way, like the bank account passbook of the ABC firm has showing credit balance. Okay, if it is written here that is a credit balance or in the terms of the loan balance, so you always write in the terms of the minus. Okay, but here it is nothing mentioned, that means it would be a debit balance. So we just write here in this way, that is 50,200 rupees. Fine. After that, one of the debtors of the firm has deposited 5,000 directly in the account of the firm. That means one day any debtor of the like suppose that this is a firm and suppose that this is a bank, and this is a one of the debtor of this firm. This is a one of the debtor of this firm. Okay, so he directly goes to bank and deposited in the firm's account. Okay, so that bank credited to the account of the firm, or in the meanwhile the bank also credited the firm account with the 5,000 rupees. Okay, so in the passbook it is in the passbook it is reflecting like this, plus 5,000 rupees, isn't it? If the person is went to the bank and deposited 5,000 rupees directly in the bank, that means now the firm account balance is up with a 5,000 rupees, or say is a positive with a 5,000 rupees. Okay, but firm's account manager is not aware of that transaction. What this line mean? That means firm account manager who just maintain the cash book of the firm is not aware of that transactions. Okay, so for this particular transaction the firm account manager is not aware of that transaction. That's why he is not posting the 5,000 rupees, so it would be considered as a zero in the cash book of the firm. All right. So now what we have to do, we have to just consider what the cash, because all the parameters we just select for the cash book here. That's why we circle here. Okay. So that's why we circle cash book here and we just circle cash book here, because we all just consider, we just considering all the parameters for the cash book only here. Okay, so we have to just looking for the cash book balance is lesser, or say cash book balance is a more than the passbook form. So for this transaction, if I say the cash book balance is lesser than the passbook balance, isn't it? And if it is lesser than the passbook balance, so if it is lesser than that, that means we just use here that is a minus term. Okay, and the difference is that is a 5,000, so just write here 5,000 rupees. Suppose that if it is just more than the suppose that here it is given the cash book of the ABC firm has been showing balance of 50,200 rupees, and we have to determine the passbook of the firm. So now we will just consider all the parameters related to the passbook firm. So in this case we just write here plus 5,000 rupees. All right. So we have to just consider here that is like if cash book balance is lesser than the passbook balance, so we have to just write here negative or say minus term. Okay, and by which difference, that is a 5,000. So just put here minus 5,000 and now solve this question. So you will get the answer 45,200 rupees. So now the cash book of the firm will be the 45,200 rupees. So that would be the answer here. So this way we just do the questions of the bank reconciliation statement. I hope it is now understandable. So the first step, what you have to do, now I am explaining one more time because it is most important for the exam point of view as well. So what I say, that is, if the passbook of the firm is given, that means we have to just find out the cash book balance, and passbook balance is given, that is 50,200. So just write here 50,200 rupees. After that, just make a table like this, cash book and passbook, because here we just write cash book, so just circle this. And now we have to just select the plus and say minus for this cash book balance. So for the first transactions, because the bank deposited the 5,000 rupees, so we just write here that would be also reflected in the passbook of the firm. So this would be the 5,000 rupees here. And meantime, the cash book, or say the firm account manager, is not aware of that transaction. So that's why while maintaining of the cash book of the firm, he will write the zero amount. Okay, so we have to just consider the parameter for the cash book here. So we will say that is, I like cash book balance is less or more than the passbook of the firm. So we just clearly see here that is the cash book is lesser than the passbook. Okay, and by what amount, that is the 5,000. So if it is a lesser, so we just use here minus term, and after that 5,000. So that would be the answer. Okay, so this is how we just solve these kind of the questions in the exam. After that, another one is also the same question, that is, first read yourself. So the bank account passbook of the firm has been showing balance like in the previous one, that is 50,200 rupees, and one of the debtors of the firm has deposited 3,000 rupees directly in the account of the firm. Okay, so which bank has credited to the account of the firm, and which bank has credited to the account of one of the partners? That means if I'm saying that is, this is a firm, and this is a bank, and one of the debtor is one of the debtor went to the bank and deposited 3,000 rupees. So instead of posting the this 3,000 rupees in the firm account, bank by mistake just deposit in one of the partners account. Okay, so what I told, that is, if the passbook of the firm is given, so we just write here cash book, and after that cash book and passbook, and this 50,200 would be written under the this like cash book. So look, in this transaction, what exactly happening? Listen, Look, firm account manager is also not aware of this transaction, like is also not aware of this 3000 rupees transaction. Okay, because here it is mentioned that like debtor of the firm has deposited this money directly in the account of the firm. Okay, so this also implies that is the firm account manager is not aware of this transaction. Okay, so whether it is written or not, you also can understand by this line, that is if it is written here in this way, that is one of the debtor of the firm has deposited the 3000 rupees directly in the account of the firm. That means the firm account manager is not aware of that. Okay, so that's why it is written like in this way. So if the firm account manager is not aware of that, that means he will just post zero amount in this particular of the transaction. Okay, because he is not aware of this transaction. While the bank also by mistake deposited this 3000 rupees in one of the partner account. Okay, means bank has not deposited this 3000 rupees in the firm account. Instead of depositing in the firm's account, bank deposited in one of the partners account. So that's why for this transaction, now just tell me, for this transaction, for passbook balance is also would be the zero, isn't it? So if we have to just find out the balance as per the cash book, so what it would be? It is zero and this is also zero. That means the cash book balance of the firm would be the 50,200. That would be the same. Okay, because in this particular transaction, the firm account manager is also not aware of that, and bank by mistake deposited instead of the firm's account, bank deposited into one of the partners account. Okay, so that's why it would be also a zero. Okay, so the firm, what is the balance as per the cash book? So this would be the answer, and this is a very confusing question. This is a very confusing question. So this is a very important. Okay, I hope everyone understand this. So one update from our side, that is we are just going to start a foundation batch, and that batch is going to start from the 7th February 2022. Okay, and this in this batch you will just understand everything from zero level to advanced level. And by subscribing this batch you will get mock test, you will get ebooks as well as the live sessions for the particular chapters, and that chapters will be in your syllabus. Okay, so you can just avail this package with a 78% discount, and you only have to apply the code Y422, and by applying the code Y422 you can just avail 78% discount. Okay, so just you can just subscribe this batch also. Okay, now next question is very important in terms of the different things to learn, and this question is also important from the exam point of view. So in this question, the some particular informations are given, and we have to just find out the current asset. Okay, so if we have to just find out the current assets of the company and all the informations of the companies given here. So first understand what is the current asset. So assets are classified into two broadly category. That is, first is known as a current assets, and another one is known as a non-current asset. Okay, so first understand what is the current assets. So all the assets that expects to convert into cash within 1 year, that all known as a current assets. So all the assets that a company expects to convert into cash. Okay, all the assets that company expects to convert into cash within 1 year is known as a current asset. So like inventories related to our stocks, that is known as a current asset. Prepaid expenses like advanced state tax payment, so it is also known as a current asset. That means prepaid expenses considered as a, sometimes it is given like advanced tax. Okay, and sometimes it is also written as here, that is a prepaid expenses. So that also known as a current asset. Okay, Cash and cash equivalents also considered as a current asset. Trade receivables. What we understand by the trade receivables? So say trade receivables or say account receivables. So it is a payment which company will receive from its customer who have purchased its goods and services on the kid. So if I'm talking about trade receivables, that means that our payment that company will receive from its customer who have purchased goods, look, who have purchased goods on credit. Okay. So these are the like a debtor of our company. If I am talking about my company, that is these are the debtors of my company, and the payment I have to just receive from these debtors, that all known as a trade receivables. Okay. So basically, if it is written here, that is a trade receivables. So trade receivables, that the payment that the company have to receive from its customer who have purchased goods on the credit. So that known as a account receivables. If I say that is account payable, or say if I say that is trade payable, so that means that the payment that company will have to pay. So if the it is written like account payable or say trade payable, that means the amount that company have to pay its creditor. Okay. Okay, that company have to pay its customer. Oh, sorry, that company have to pay its that company have to pay its creditors from whom company purchase goods into goods on a credit. So that all known as a account payable or say trade payable. Okay. So opposite of the trade receivables is a trade payable. So trade receivables also considered as a current asset. Okay, while trade payable, just opposite of that, is considered as a current liability, and short-term borrowings, that means short-term debt, that is also known as a current liability. Okay, so whenever you just find the questions related to current asset, current ratio, current liabilities, you have to just first figure out what are the current assets are given and what are the current liabilities are given, like this way. Okay, you have to just write by this way, that is like inventories that are current asset, advance tax or say prepaid expenses that are considered as a current asset, cash and cash equivalents that considered as a current asset, trade receivables, account receivables, that means the payment the company just going to receive from its debtor, so that known as a trade receivables. Okay, and opposite of that, that is a trade payable, that means the amount company have to pay to its creditor, it is known as a trade payable. Short term borrowing or say short term loan, that also considered as a current liability. Okay, so if we have to just find out the current assets here, so just tell me the value of the current asset now. So what we have to just here, that is current asset, our inventories, our current assets that are 50,000 rupees plus advance tax or say prepaid expenses, that also known as a current asset. So just add 4,000 here. After the cash and cash equivalent, that is given 30,000. So just write here 30,000 plus, and trade receivables are given, that is also a current asset. So just write here 50,000 rupees. So the answer would be, so answer would be 1,34,000 rupees. So that would be the answer for the current assets. Alright, so that's how we calculate current asset. Like we have to just first classify current asset, current liabilities, and after that we can just solve. Okay. Now next question is about the current liabilities. So first understand what we understand by the current liabilities. So first understand that is current liabilities also known as a short-term liabilities. Short-term liability. So that are usually debts that have to be paid within a year. Like in the current asset, what we have to, like in the current asset, company expected to convert to the company expected to convert to cash within a year. In the same way, the current liabilities that company have to pay within a year. That all the debt, all the short-term debt that company have to be paid within a year, So that all known as a current liabilities. Okay, so like trade payable means like the amount that company have to be pay to its creditor from whom the company have purchased goods on the credit. Okay, so that all payment known as a trade payable. Fine. Trade payable, bills payable, short term loans, that all considered as a current liabilities. All right. Okay, so if we have to just calculate our current liabilities here, so we know that inventories are the current assets, advance tax payment or say prepaid expenses. Okay, like we paid already advance tax payment, so this is considered as an asset of us. Okay, so this will be a current asset. Cash is also considered as a current asset. Trade receivables also considered as a current asset, while trade payable or say account payable is considered as a current liability. Short-term borrowings also considered as a current liability. So if we have to just calculate the current liabilities here, so what will be the current liabilities? That would be 1 lakh, that is account trade payable, and short-term borrowings, that is 4,000. So the answer would be 1,04,000 rupees. So that's how we calculate. Okay, and these are the very common terms, and you will sorry, and these are the very common terms, and you will just find questions in the same way in the exam. So just understand this. So this is how we calculate a current liability. After that, another question is about quick asset. We have to just find out the quick asset. So we understand till here that is the current asset, non-current asset, current liabilities. Now the another term, that is a quick asset. Okay, so if I say that is the term that is quick, that means highly liquidated. That means highly liquidated. So if understand this, if current, if I'm saying that the current asset or say current, if current means liquidated, if current means liquidated, so quick means highly liquidated. All right. So that means if you can convert any current asset into a cash without using second step, that means in only one step, or say as soon as you can just convert a current asset into cash, then it will be known as a quick asset. That means current asset is also considered as a liquidated asset. That means you can just convert into cash within a year. And quick asset is considered as a more highly liquidated. That means you can so quickly you can convert into cash whenever you just want. Okay, so that all known as a quick asset. All right. Okay, so quick asset like cash. If we have to just find out the quick asset in this particular information. So first understand and just write down that is inventories are not the part of the quick asset, because there are some stocks also on the production stage, or say are not ready for available for the sale, or say you have to just wait for the buyers to purchase your goods from the factory. So inventories related to our stocks, that means there are some stocks that also not ready for available for the sale, and or say you also have to just wait for the buyers for purchasing the stocks from your factory, so that not considered as a quick asset. Okay, meanwhile that considered as the current asset, not a quick asset. Okay, so if I say that is inventory, so inventory is our current asset, not a quick asset. Okay, so just write here that is current asset, but it is not a quick asset. Advance tax, that is a prepaid expenses. Prepaid expenses also not a part of a quick asset. Prepaid expenses also a part of a only current asset, not a quick asset. Okay, cash is always a highly liquidated, so that will be a quick asset. Trade receivables, account receivables means our debtors, from the debtors we can always just receive the payments. Okay, so that also considered as a quick asset. Okay, so if we have to just find out the quick asset here, so what will be the value of the quick asset? Because that all will be part of the current liabilities. So we just find the quick asset from these information. That would be the 50,000 plus 30,000. So that would be the 80,000 rupees. So that would be the value of the quick asset. So just understand in very simple way, like if we have to just find out the current asset, so we how we just find out the current asset, because assets are of the two kinds, that is a current asset and non-current assets. So current assets are all the assets that company expected to convert to cash within a year, that known as a current asset. While non-current assets are the assets that cannot be converted easily into cash and mostly meant for the long term investment. So if you just tell me, that is if I'm just explaining the non-current asset, so like we understand the current asset, quick asset. So what we understand by the non-current asset, like building. Okay, in the building, land, goodwill, trademark, vehicles, that all will be the part of the non-current asset. Okay, if I say that is building, goodwill, company's brand, company's trademark. Okay, so land, so that all will be a part of the non-current asset. Okay, so that means the company just expected to convert into cash beyond 1 year. Okay, so that all known as a non-current asset. So we are just considering here the current asset. So current asset, that means liquidated, that means the company expected to convert to cash within a year. And quick asset, that means more highly liquidated, that means whenever you just want a cash, you just make the cash. Okay, so in this particular information, inventories are not the part of the current asset, and prepaid expenses or say advance tax also not part of the quick asset. Okay, so inventories are the current asset, advance tax are the current asset, but both of them are not the quick asset. Prepaid expenses and inventories or say stocks, that are not the part of the quick asset, while cash and account receivables are the part of the quick asset. Okay, so the answer of this question would be the 50,000 plus 30,000, and that would be equal to the 80,000 rupees. So this is how we calculate. Now understand, we have to just find out the current ratio. So like I always explain, that is we in the for finding the ratio analysis chapter, if we have to just find out the ratio, so we do not need to memorize any ratio. If there is a written that is the current ratio, so just write by this way, that is the current ratio equal to the current assets, and it is divided by the current liabilities. Okay, so here current assets, like we just find out in the previous questions, like this is inventories are the current asset, advance tax are current asset, cash current asset, trade receivables current asset. So just sum up these all, so this would be the 1,34,000 rupees, and current liabilities are the 1,04,000, so this would be the 1,04,000. So now just solve this and you will just find the answer here. So this would be something 67 is to 52. Okay, or say 1.29 is to 1. So this would be the answer for this question. Okay, so just look how quickly you can just solve the questions here of the ratio analysis. So if we have to just find out the quick ratio, if we have to just find out the quick ratio, so this is a very important to understand that for finding the quick ratio, the formula will be, yes, quick asset, and it is divided by the not the quick liability, because in liability cases we do not write here quick liability. Okay, we write it always current liability, because in accounting we always just looking for the current liabilities, not a quick liabilities, because in the liability case, because in the liability or say debt case, we consider we have to pay all the liabilities, So that's why either it's a short term or say either it's a very quick short form. We always just looking for that we always have to pay all the liabilities or debt of the company. So that's why we just consider here current liability, not a quick liability. Okay. So if we have to just find out the quick assets, so we know that inventories or say stocks are not the part of the quick asset, advanced tax are not the part of the quick asset, while cash are the part of the quick asset. Okay, that means highly liquidated. Account receivables are the part of the quick asset. Okay, so just sum up these two, that would be the 80,000. Okay, while in the liability case, we just mostly, means infrequently way, we just consider current liabilities, not a quick liabilities. Okay, so current liabilities, that is the account payable or say trade payable or say short term borrowings. So just add this and 1,04,000 this is, and just solve this and you will just find the answer here, and the answer would be the 0.77 is to 1. So that would be the answer for the quick ratio. So this is a very important questions in the term of the exam point of view. I hope this lecture is very understandable for everyone. So that's all for this session, and if you have not downloaded the Adda 4247 application, so just download this and subscribe the Officers Adda 247 channel, so that you can get the notifications of the live sessions, you can get the notifications of the lectures. Okay, so if you have not joined us on the Telegram channel, you can also join us on the Telegram channel. And thanks for watching this video. And if you're just liking our content, please do not forget to hit the like button on this video.